Hey Bowtie Nation, Joseph Hogue here. Thank you for joining us for another Monday market update, 9 a.m. every Monday morning. Get you ready for the week. Stocks to watch, economic news to follow, and folks, you could not make this stuff up. A headline in the Wall Street Journal jumped out at me last week. Activist nuns with shares of Smith & Wesson sue gunmaker. And I just had to read it. I'll detail the case, but it brings up an important point in lawsuits that you see in many of the stocks and how you should invest. Stick around after that. We'll do our Monday market update, all the stocks to watch this week, and the economic news you need to see. But first, if you want to see the 5 stocks I'm buying for the next 30 years, my forever stocks, look for the link I'll leave in the description below. It's a free report I put together with the Motley Fool, some of the biggest stocks in my portfolio. That report is totally free. You'll see the first stock immediately, and then they'll email you the full report with the other stocks. It's an easy way to show your support for the Let's Talk Money community and see some of my favorite stocks, so look for that link in the description below. Back to our main topic though, and the news today is more about a lawsuit hitting your favorite stock than any specific suit. I'll recap the Nuns versus Smith & Wesson case that caught my eye, but it really brings up an important point when you see some of these lawsuits filed against one of your stocks. Now in that case, the Sisters of 4 Convents, the Adrian Dominican Sisters of Adrian, Michigan, the Sisters of Bon Secours, USA, Sisters of St. Francis of Philadelphia, and the Sisters of the Holy Name of Jesus and Mary have sued in Nevada court to pressure Smith & Wesson, that's ticker SWBI, to change the way it markets and sells its popular version of the AR-15 rifle. They're arguing in this case that the company's practices put shareholders at risk through liability after the rifle has been used in several mass shootings. These convents collectively own about 1,000 shares and argue that the marketing practices by the company played a significant role in contributing to, and I'm quoting here, the most heinous gun crimes in U.S. history by promoting its guns in ads mimicking some of those first-person shooters in video games and really appealing to those young male consumers. This isn't the first rodeo for the Nuns, though. The sisters have used the same tactic to file shareholder proposals at other companies like Hyatt Hotels and General Electric, and it's not the only lawsuit that Smith & Wesson is facing. The company is also in several others directly related to recent mass shootings, including a 2022 suit by residents of Highland Park, Illinois for that July 4th parade shooting. Smith & Wesson did lose a fight with religious groups and other shareholders in 2018 in a resolution that called on the company to put out a report addressing its risks of the product in gun violence and show how the company was trying to mitigate that. I really have no commentary on this specific case, the Nuns lawsuit, because God bless them. Literally, God bless them. But it does raise a point about some of these lawsuits you see advertised here on news media. And I say advertised because a lot of these lawsuits you're going to see are nothing but spam business for law firms. I know because I get asked weekly if I'm worried about some lawsuit that was recently filed against such and such company. And I know what's happening immediately, but I look anyway and see a list of these shareholder alerts, investor alerts, and final deadline for shareholders to sign up to a lawsuit against a company. And if you click on any of these, it's just the same template lawsuit filed as a class action for aggrieved shareholders that management somehow misled investors about the business, that if you suffered a loss in the shares, to call now and get your money back. Listen, folks, there are legitimate lawsuits out there. Maybe this Nuns case is one of them. I don't have an opinion on that one, but these spam lawsuits you see on any stock that has fallen in price are just the worst cancer of our legal system. There are law firms out there where all they do is these spam class action lawsuits, hoping to sign up enough people and try to get some kind of settlement from the company and of course a huge fee for the lawyers. But 99% of these are thrown out and never see the light of day. Running a business is uncertain, and while it sucks when management of one of your stocks can't seem to get their head out of their asses, it happens, but it's not legally negligent. So as you're scrolling through the news on your favorite stock, the lawsuits that are worth paying attention to in your analysis are those where real insider trading or fraud is going on, where the company's product may have harmed somebody without a disclosure. Most of these, though, these spam lawsuits, they aren't something to worry about when you see them on a stock. Now, I want to turn it over to some of the stocks I'm watching this week. First up, ChargePoint Holdings, ticker CHPT, did report its earnings last week with nothing surprising after it pre-announced last month. Revenue was much lower than expected, came in about $105 million for the quarter. That was down quite a bit from the year before, partially though weakened on that prolonged strikes by auto workers. So as that auto worker strikes came off, we do expect revenue to come back up a little bit. What is surprising here was that the shares jumped 17% last week as investors realized that the company still has a strong potential for growth. There is no debt due here until 2028, and they have nearly $500 million in cash and credit. It's about $350 million in cash on the balance sheet. It's about another $150 million in a line of credit that they can draw for that capital liquidity that they need. The company has plenty of liquidity in these Inflation Reduction Act funds, which was the worst policy name ever. But the IRA funds for those charging stations should be coming online, should lift revenue for the coming year. Full disclosure here, I do own about 46,500 shares at a cost basis about $3.13 per share. I think this one has much further to go, at least over the next couple of months, as we see that revenue come back up from the IRA funds, from that plan, as well as investors just getting back into this stock. Alibaba Group Holdings, ticker BABA, and really all the Chinese stocks have hit peak fear this year as institutional and retail investors abandon the group. Their shares here are down 15% just over the last month, down 40% from this peak here in January of $120 a share. Revenue, though, is still expected to grow 10% next year. We can go here to the analysis tab, see the expectations for earnings and revenue. We can see that over the next year, it does expect to see revenue growth of 9.4% to $147 billion. Earnings per share of $10 per share over the next year. Now, I'm expecting it to even surprise on this, probably a cost-cutting plans to show through when the company reports its Q4 earnings here in February. Now, besides the just generally poor sentiment in Chinese stocks, Alibaba has made some strategic mistakes and did lose market share to some of its competitors this year. That brought co-founder Jack Ma back last month for a motivational note to employees, and I think the company is going to be working hard to prove that it can stage a comeback, including cutting a lot of the non-performing plans and programs that it has going on. So I think you're going to see much higher earnings per share in that fourth quarter, as well as all through next year as it stages this comeback. I'm also watching Advance Auto Parts, ticker AAP. It's up 17% since its October low, but still has a way to go to that fair value. The company has confirmed that it will be finding a buyer for its WorldPac and CarQuest segments. A sale of these two segments could net at least $2 billion. Now, that announcement and the use of the proceeds, I'm assuming it's going to use a lot of those proceeds to pay down debt and increase the share buyback program. It could go a long way to bringing investors back up to this stock. Showing you that big picture idea here with the sectorspiders.com sector tracker. Great free resource here. We can see over the last 5 days, 5 of the 11 stock sectors did close higher last week with 2 obvious trends in the data here. We can see energy stocks sold off on still lower oil prices and are now the only sector negative over the last month, down about 10% just in the last month alone. Interest rate sensitive sectors here, also real estate, utilities, and consumer staples, all sold off on Friday on that jump in interest rates. Now, energy stocks could be approaching a floor. Going to talk about that here, though the rate-sensitive stocks may feel a little bit more pain as those rates back up slightly after a big move lower last month. Last month, we did see almost 5% there on the 10-year Treasury. It fell down all the way down to about 4.17%. That is a huge move for interest rates. It backed up a little bit on Friday with that very strong jobs report. I think it comes back a little bit up, a little bit higher there, just rebounding a little bit and could hit some of these stocks in those rate-sensitive sectors as well. We can zoom out to the 3-month picture here, and we do see that energy is down more than 10% over the last 3 months, really getting hit hard on that falling energy prices, those falling oil prices, really on the supply picture in the United States. United States oil production booming this year. OPEC cutting some of its production, but not enough to really keep those prices supported. I do want to show you something here by the FactSet Earnings Insight. Great free resource on the tool. Surveys all the analysts out there on stocks. And you can see here in this chart, the S&P 500 sector level bottom-up target price versus closing price. Now, what you're looking at here is the target price of each stock in each sector of the economy. Okay, so all the stocks in the energy sector, all the stocks in communication services, healthcare, the target price by analysts for each of those stocks in that versus the closing prices where they've traded just this last Friday. And what you get is kind of an analyst estimate for each sector for the upside potential return over the next year based on those target prices. And we do see that energy has the best upside potential among analysts with target prices 26% higher over the next year. Now, of course, some of this is just old analyst targets, old price targets for stocks that haven't been updated lower as that sector comes down. But the sector is coming into good value here with oil prices right around $70 a barrel. The U.S. government has promised to start refilling that strategic petroleum reserve over the next 5 or 6 months, buying oil, taking it off the market, putting it back in those caverns there for the reserve. That should help support oil prices as well as just general economic demand. Should support oil prices here, $65, $70 range, and that should help support some of these energy stocks here as well. Investors are going to be facing some market-moving data this week with the ever-important monthly inflation data as well as the Fed's decision on interest rates. First up is the Consumer Price Index. That CPI hits first on Tuesday. Expectations are for the headline number to fall down to 3% on a year-over-year basis, 3% versus 3.2% last month. Core CPI, which is the inflation that strips out kind of volatile food and energy prices, still expected to be rather high at 4%, but I think this could surprise lower and prove that inflation is coming down, especially in that headline number that includes rents. We are seeing rents disinflation come down quite a bit, and it's probably going to help the main headline inflation data come down 3%, maybe even lower than that. The Federal Open Market Committee, the FOMC, is also going to wrap up its two-day meeting on Wednesday. Here we are on the CME Fed Watch tool, market expectations for what the Fed is going to do as far as interest rates. I want to show you this here. Investors are going to be hanging on every word released in the statement, as well as Chairman Powell's press conference at 2:30 p.m. Eastern. Now, if we scroll down here, we can see the probabilities, market-based probabilities for interest rates at each of these meetings. We do see here 12/13, so December 13th, this meeting this week, 97% market odds that the Fed holds pat, does nothing. I think we can pretty well pencil that one in because of where the jobs and inflation numbers have been coming in. But we do see really a Goldilocks scenario in the economy, especially with that strong jobs report last week that showed that the job market is slowing down, but is still fairly strong, is keeping the U.S. out of recession. According to the CME FedWatch rate tool here, it's now expected to cut rates as early as May. If we go down here, the blue here is what the market-based expectations are saying about Fed rate cuts. We do see here that it stays at 5.25 to 5.50. That's about 5.25% to 5.5% on the federal funds rate there all the way through the March meeting. But then here in the May meeting, and you get almost 78% market odds here that the Fed will cut its interest rate at least 25 basis points, maybe even 50 basis points, maybe two cuts there priced in for that May meeting. Then here we see as many as 5 interest rate cuts, 1, 2, 3, 4, 5 throughout the rest of the year, maybe even more, just depending on what the economy shows us. Now, those interest rate cuts and even leading up to those, as the market expects, we're getting closer to those interest rates cuts, going to be very supportive of stocks, especially the growth stocks and real estate that have been hit so hard by the higher rates over the last year. Don't forget to get your free report and see the stocks I'm buying for the next 30 years, my forever stocks, free with the link below. Or click on the video to the right for a stock that could have a 40% upside along with a 9% dividend yield. Buy this stock before it goes on sale. Don't forget to join the Let's Talk Money community by tapping that subscribe button and clicking the bell notification.